Good afternoon, ladies and gentlemen. This is the Defion Productions podcast. I'm your host, the hardest working nobody in Bitcoin, Don Rinaldi. We are going to talk about a lot of things today, most notably the shakeout in the crypto markets. If you haven't been paying attention or been living under a rock, we've had quite the dip the last couple of days. We're going to talk about, is the bull run over? Is this it? Packing it in? Going to be another bear market, or is this just another bump in the road that we typically get in bull markets? And are we going to start moving upward sometime soon? We're going to take a look at the markets currently here. We have Bitcoin sitting at 84,458. It's actually up in the last 24 hours, 0.15%, up almost a whole percentage point in the last hour. But in the last 7 days, we're down about 12.5%. We dipped as low as 79K last night. It looked like we were going to be hanging out in the 70s for a minute, but it hit 79 and then got back in the 80s, and it's kind of been hanging around there most of today. Ethereum really taking a beating, 2,200. It's down larger in the last 7 days. It's down almost 17%. And in the last day, it's down 4%. XRP also taking a beating, down 17% at $2.14. Solana taking a beating as well, down 14.5% at $146.70. I did see it touch down in the 130s. I think it got in the low 130s last night. And we can also talk about the coin that launched last week that's been probably one of the most popular coins of the crypto space, surprising to me. You got Picoin, which is sitting at $2.11. It was hovering around $3, even while the crypto markets were basically imploding. It's down about 20% in the last 24 hours, but it's still holding at over $2.11, which is really extremely surprising to me, but it is what it is. There's a lot of pioneers out there, a lot of people going on those couple of exchanges. I did see that Pionex in the United States listed Pi. I'm here in New York State. I don't have access to Pionex. If I go on there, it's restricted. If I VPN, I can get access, but I can't get coins on or swap anything because I have to KYC. And once I KYC and show that I have my residence in New York State, I can't do anything, so it's no good for me. Until they get on Coinbase or Gemini, I'm not going to be able to do anything with the tokens that I have. It's been an interesting week on social media for me. I've done a lot of defense of Bitcoin against these tourists, I would call it, in the crypto space, these Pi enthusiasts who falsely believe that Pi is better than Bitcoin or going to be the next Bitcoin, or even beyond all the crazy price valuations, even if they don't believe that it necessarily is going to go past 1,000 or 300,000 a coin, they think the tech is great. They think the founders are great. They think it's awesome that it's centralized. Like all the things that are opposite of Bitcoin. It's just wild because these are basically, noobs in the space. And they think that because these people are from Stanford and that they, created some crypto coin, that it's just going to be the next Bitcoin just because. So I made a decision, and I posted last night that I'm no longer going to be posting anything on at least on X, in regards to Pi. I'm not going to interact with anybody that has anything to say about Bitcoin and Pi. I'm just going to leave it all alone. I will address things on the podcast because this is a Bitcoin and crypto podcast, and Pi being a coin that is being traded. And in the last couple of days prior to today, it was probably the only coin that was actually green. So it would be worth noting that and talking about that. But other than that, there's going to be an article I'm going to bring up later on in the podcast to kind of drive home my final points on Pi. And then I'm just going to kind of leave it off to the side until something mainstream comes up that's worth talking about in regards to that token. Let's take a look at the first thing that we got here from our news stories. This is a tweet from yesterday. M2 liquidity is the white line in this chart. And the Bitcoin dip will soon come to an end on the recovery, and the recovery will be violent. So if you take a look at the M2 liquidity chart historically, Bitcoin follows the chart but lags it. So as you see, you got Bitcoin in orange here, and you have the liquidity in white. And basically when the liquidity goes up, the Bitcoin price goes up. When liquidity goes down, the Bitcoin price goes down. And you see how it lags slightly. When the liquidity comes down, Bitcoin doesn't necessarily come down right away. It'll take a month or two before it actually comes down. If you take a look at liquidity here, Bitcoin was at about 106 and liquidity took a dump. If you take a look right there, 106 there, liquidity dropped right there. You see where my cursor is. And that was about a month. Let's see. Let's look at the bottom of the chart. Yeah, it was about a month ago, month and a half ago. So the Bitcoin price lagged on that and now follows where the liquidity is gone. So now if you take a look, we are here. Liquidity has already moved back up here. So according to liquidity, the liquidity would equate a fair value price of Bitcoin around 100K. But the price lags. And it's always lagged if you look and zoom out in these charts. So this is a really good indicator to kind of take a look and see of what the next moves of Bitcoin probably are going to be. According to the M2 liquidity supply white line on this chart, in the next, probably sometime in March, before March is out, we'll be making our ascent back up again. Now, how high will it go? This liquidity is still going to move more, and how high will the liquidity go? I mean, once they start pumping, they don't seem to stop. So it's a good tool. I wouldn't say it's the only thing to do. And I'm going to talk about trading specifically this podcast. I'm not going to do it and dive in right now, but you want to use a lot of different things if you are going to be one of those degens that are going to trade. I highly suggest not trading, but if you are going to trade, you definitely want to have a couple different sources that you're using when you're trying to figure out what the next move of whatever asset, whether it be Bitcoin or some shitcoin that you're trading, is going to do. But you know, as these markets will show you, even in the middle of a bull run, you're going to see these violent moves down, and it'll liquidate your positions, especially if you're heavy on leverage. This next chart that I got here too, this is from the 2017 cycle, and the 2021 cycle looks pretty similar as well, but this is specifically from the 2017 cycle. If you look down here, you got 2017 here, and then you have the end of the year where you had the blow off top, November, December at the end of this chart here. During that run up from basically under 1,000 to 20,000, so that 20x that you got, you had a 38% drop, another 38% drop, a 33% drop, a 38% drop, a 26% drop, and then a 29% drop right before the parabolic top. So this is normal for every cycle. The 2021 cycle had 155% drop, actually. The one of the largest drops we've had in a bull market. It was after the first run up to 60K. The price dropped 55% in the middle of the bull market, and we still reached 69K by the end. So these drops, we were at a top of like 108. So from 108 to 79, I mean, you're talking about a 28 to 30% drop, which is basically less than what the average drop is in a cycle. So it was a little bit less than an average bull market drop, to put things into perspective. The only thing that's different is the price points are higher. It's a lot different when the price is dropping 38% when it's $2,000 a coin and it drops down to $1,400. Much different when the price is $100,000 and it drops down to $79,000. The nominal terms are higher, but the percentage drops are pretty much the same. So you got to keep all this stuff into consideration when you're trying to build your thesis and you're thinking about what you're trying to do with your allocation to whatever assets you're allocating to. Again, obviously, I'm the Bitcoin maxi. I allocate to Bitcoin. I do a podcast with Troy, who at one point in time owned 60 different tokens. So just because somebody doesn't share my ideology and doesn't have the same thesis that I have about Bitcoin doesn't mean that I still can't rock with that person, or even, give them some advice on what to do with the token that they do have of choice, which is, some of the same things I was trying to do with the Pi token before it got way out of bounds and way out of line. And part of that is my fault as well too. I fed into it, and it is what it is. I'm looking on the screen. I am getting a little bit old. I got a couple of comments.
A few comments.
Black Thunder. I'm gonna give a shout out to Black Thunder. He's a follow on X. He keeps it real. Like he follows this podcast, but he completely disagrees with my points I make on Pi, which is fine. He did say, yeah, that's decentralized right there. Pi is a prodigy. We are a cult. Maybe the opposite of Bitcoin is what we need for a change. I understand what he's trying to say there, because you, from the outside looking in, Bitcoin maximalism can look like a cult, and it can be a cult. I'm not even going to lie and say that it's not. I try not to be a toxic Bitcoin maximalist. I try a bit for those that aren't really don't know what that means when you say a toxic Bitcoin maximalist. It's basically it's Bitcoin only, and if you don't do Bitcoin, you're an idiot, and every other coin is crap, and you're stupid, and I know that I sometimes fall under that, my own standard of not trying to do that, but I wholeheartedly do not believe that just because somebody is not a Bitcoin maxi or is not Bitcoin only that means that there's something wrong with them. What I try to portray is the fact that I've been a Bitcoiner since December of 2013. I didn't get it right away in December of 2000. I didn't even get it in the first cycle. I'm like my first full cycle from 2014 accumulating up to that top of 2017. I can't even lie and say I completely got it then. It took me, and I've said this on previous podcasts, all the way until the COVID crash to really have it completely click and it really correlate with the money supply and the printing of money and why Bitcoin was necessary, and even the fact of like what real true decentralization is and why it's important and why not having founders and not having people that can change protocols on you, which I've seen happen with ETH multiple times. I used to own a lot of ETH back in the day, so I've seen what has happened to ETH. ETH is the second biggest crypto coin, and there are so many problems with that token. That token should be like $10,000 a coin or more right now. It really should. If it wasn't for the ETH Foundation, really just, I don't want to say destroying the project. It's hard to say you destroyed a project that's still worth $2,000 plus a coin. It's not going to say they destroyed the project, but they significantly derailed it. Making that decision in 2022 to go from proof of work to proof of stake, because they have founders that can make that decision, was very detrimental to that project. And the fact that they could do that is problematic. So that's why these tokens, like, I'm not going to name tokens because it's just going to piss people off, but name your token. If there's active founders and there's a team that can make changes, that's problematic. That doesn't exist with Bitcoin. Satoshi is, in my opinion, dead, or the greatest human being ever to live. And I don't think that that's the case. I think he's dead. I think Bitcoin is one of the handful of people that we think it is. For me, I think it's Hal Finney or one of the other individuals that have passed that were early cypherpunks. And those million tokens are never going to move. And there's not going to be a Satoshi that's going to come say, I want things to change from proof of work to proof of stake, or I want to fork off into some other thing. Like, we went through the block size wars in 2017. We had early developers who felt a certain way and wanted to change the protocol of Bitcoin. They wanted it to be more peer-to-peer instead of store of value. And it was shifting towards the realization that peer-to-peer wasn't going to be what Bitcoin was. It was going to be this store of value proposition that was going to outpace inflation, all the things that we've talked about before. And Roger Ver and some other Bitcoiners felt differently, and they wanted to change the protocol. And you can't. They forked into another coin, which you can do. You can fork off coins. There's a lot of coins that fork. And they did that. And I think it's pretty safe to say that Bitcoin Cash and Bitcoin BSV are utter failures. They both trade at a fraction of the price of what neither one is $1,000 a coin. Actually, let's take a look. I'm actually curious because I actually never looked to see what the prices of these tokens are because I never care. But let's take a look at what BCH. Not to mention that the founder of BCH is in extreme legal trouble himself. So Bitcoin Cash is $312 a coin. So Bitcoin is $84,000 a token. Bitcoin Cash, which forked off from Bitcoin because they wanted to be peer-to-peer back in 2017, is trading at $312 a token. It's not nothing. It's a $300 token. It's more than some of the other tokens, but it's nowhere near what the price of Bitcoin is, and I believe that BSV is even worse. I think BSV might even be under $100. It is holy shit. Look at BSV, Bitcoin Satoshi Vision, the Craig Wright coin, who tried to say he was Satoshi and was proven in court that he's not. $35.52 a token. I'm going to go out on a limb, and the pioneers are going to like this one. I'm going to go out on a limb and say at some point this cycle, the Pi coin might actually be worth more than BSV per token. That might get some pioneers to not block me anymore on social media, because BSV is straight. There's nothing. There's nothing. That's just a token that trades. There's no utility. It's trash. I will say on record that there's more utility in the Pi token than there is in BSV. And I've gone through all the things that I've said about Pi, and I'm going to say one other thing about it before this podcast is over, but I will say that the Pi token is better than this BSV trash. That's how garbage that token is. So, again, to get back to the original point, you can't change Bitcoin's protocol. There is no active founder or founders that can come in and say they want to do something different, change everything, add more tokens. There's only going to be 21 million tokens ever. They can't come in and say we're going to do 100 million. They can't come in and say they're going to do 121 million. None of that exists. None of that is possible. That's why Bitcoin is the token of choice. That's why, in my opinion, again, I'm not saying this like fact, and anybody that doesn't believe this is a piece of shit. In my opinion, it's Bitcoin only. If you wanna outpace inflation, if you wanna be in this market and hold something for the long term, Bitcoin only. Now, again, I podcast with Troy. Troy holds other tokens. I understand his thesis. I understand his philosophy. His philosophy, which others have, is that they're trading these other tokens in order to get more Bitcoin. I mean, I have a day job that I go to, and I mine fiat to get more Bitcoin. So, I mean, if you're going to use shit coins to try to level up and get more Bitcoin, it's hard. You have to time that perfectly, and we've seen this cycle that you end up with less value in the altcoins if you're holding altcoins, and then you get liquidated in your trades. So that strategy is a very difficult strategy to employ. So it is what it is. We did that one, so let's go on to the next. Let's talk about this. The Texas Strategic Bitcoin Reserve Bill has been passed by the committee. This was yesterday. Let me look at the bottom of this tweet. Yeah, February 27th, yesterday morning. It now goes to the whole state Senate for a vote. The state House will need to pass it, 2 before being signed into law by the governor, and then Brad Johnson. The committee for SB 21, sans the charitable donation provision, just passed 9-0 vote. Strategic Bitcoin Reserve heading to the Senate floor. There's been numerous states that have had it pass in the House and then fail in the Senate. There's even been a couple of states that it failed in their House as well. So there's a lot of chatter, a lot of tweeting or Xing or whatever you want to call it now on X, of people talking about it's like half of this. There's something like between 20 and 25 states now that at least are proposing it in their states Congress. So there's a lot of states that are proposing it. Not one yet has been passed. And even the ones, and I believe Texas is one of them as well, there's a lot of stablecoin digital asset language in it. It's not just a Bitcoin only thing, which again is the talk on the federal level too, where you have the digital assets bills, and there is no Bitcoin strategic reserve only that's really being tossed around. There's a lot of other things that are mixed into it. And again, I said this a podcast or two ago, we don't need a Bitcoin strategic reserve. Other Bitcoiners will probably disagree with me. Bitcoin will continue to do what it does with or without the Bitcoin strategic reserve. Will it take a little longer? Maybe. I don't know. Will it speed things up if there's a strategic Bitcoin reserve? I'm sure that we'll get price action if there is. But in the grand scheme of things, I don't get too excited. I don't get too upset either way if it passes or if it doesn't. So, like, if you look at the comments here, Pierre Richard, who tweeted this, somebody asked, that next meeting happens only once a year, right? And he said the legislature has a regular session every other year, and it's currently happening now. So, I don't know. We'll see. We'll see what ends up shaping out. I don't get too excited. I don't get too upset. Either way, it is what it is. Next story, Simply Bitcoin. I've shouted them out before. They're a great podcast to watch. I try to watch as much of their content as I can. They are a Bitcoin-only podcast, so right up my alley. They tweeted yesterday, Justin, Michael Saylor met with the House Financial Services Committee and Rep. French Hill on Tuesday to discuss digital assets and how it will make the U.S. the global leader in Bitcoin. Saylor also presented a digital assets framework during the meeting, which is here. I'm going to click on it so we can kind of take a look at it together. Wow, that's small. Can I zoom in on that? Oh, yeah. Look at that. View. Oh, I don't want to zoom out. I want to zoom in. Well, that's not really doing much. All right. Well, I'll just you can go to this. I'm not going to go through it too much. If you go to Simply Bitcoin's tweet from yesterday on Wednesday, you can see. I'm sorry, today's Friday, right? Jeez, it's not Thursday. We usually film on Thursdays. Their tweet on Thursday, the first pinned under the tweet is the digital assets framework that Saylor pitched. I did a little bit of research and reading on some of the things he talked about. It's basically, if you've watched any Saylor podcasts or you've seen Saylor speak at any symposiums or any conferences, they're basically the same thing. He talks about the why of Bitcoin. He talks about, outpacing inflation. He talks about, decentralization. He talks about number go up and CAGR and all that stuff and how it would be beneficial to any corporation. In this case, it would be the government as an entity owning it, holding it, and what it could do for their balance sheet. I don't have a lot of faith, again, in these representatives to do anything that's going to be Bitcoin only. Because Bitcoin only is the antithesis of the U.S. dollar. The U.S. dollar homogeny, I should say. The fact that the dollar is the world reserve currency. Let me be more specific. Not specifically the dollar, the homogeny of the USD as being the U.S. or the global reserve asset. It threatens that. If the United States were to legitimize Bitcoin as being a strategic asset, it would undermine the dollar, and that would look bad for the dollar. It would weaken the dollar, and there'd be an attack on the dollar. So I think it's all just talk. We have a president who said, Bitcoin. He talked all the great stuff at the Bitcoin conference, and I said at the time in July that I didn't think his speech was that great. Bitcoiners got excited, the price pumped when he got elected, and he makes a meme coin 2 nights before he's going to be sworn in, and then his wife does it the day after, and they're shitcoining. Like, it's, if you understand Bitcoin, you don't meme coin. Full stop. Like, that's just, if you understand Bitcoin, you don't think anything else is on the same level, and you don't put your time and energy in it. That's just what it is. Like, that's just the facts. If you truly spend the time you need to spend on Bitcoin and go down the rabbit hole and understand exactly the underlyings, read the white paper, understand it, get the white paper for dummies if you have to, like I had to do, because the regular white paper is too technical for me. But when you understand it and you see what's happening with the traditional global economy, you understand that there's only thing that can save us is Bitcoin. And if Bitcoin ain't it, we're screwed. None of these other coins are going to save us. XRP, Solana, Ethereum, Picoin, none of these coins are changed. They're all fiat-based assets. They're all centralized the same way that the global system is centralized. There's central banks with the traditional finance system, and there's Brad Garlinghouse and the Ethereum Foundation and Stanford professors with shitcoins. It's no different. You're at the mercy of that. So there's they can do whatever they want, and they do time and time again. Not to mention the overwhelming amount of supply that they all hold. Yeah, everyone that I mentioned, Vitalik, Garlinghouse, right on down the line. It's just what it is. It is what it is. It's factual. You can feel how you want to feel about your token, but the facts are the facts. The founders own large supplies and they control the protocol and they can make changes. You don't have that with Bitcoin. Big, huge difference. Enormous. Like Grand Canyon wide difference. Whether you want to admit it or talk about it or not, it doesn't change the fact. Rich, you want to let me get this one up here since we're talking about Trump? You can chime in here too, Rich. We're going to talk about your boy, Donald J. Yesterday, U.S. House Democrats, which isn't surprising. It's all partisan. It's not like this is definitely going to go somewhere and something's going to happen, but it's news, so we'll talk about it. U.S. House Democrats to introduce the Meme Coin Act to prohibit the president, the vice president, members of Congress, senior executive branch officials, and their spouses and dependent children from issuing, sponsoring, or endorsing a security, future, commodity, or digital asset. In the news article from ABC News, House Democrats take aim at Trump crypto meme coin. Before I ask you to weigh in, Rich, I will say one thing. There's almost nothing that House Democrats will do or say that I'll ever agree with. And this is one of the few things that I will agree with. I think it's rational and logical to say that members of Congress, the president, the vice president, executive branch officials, and their spouses, children, should have anything to do with endorsing any securities, futures, commodities, or digital assets. I 100% agree with this legislation. Your thoughts?
I'm kind of with you on this. My problem is you could have introduced it 10 years ago. And when this stuff started happening and you had people out there doing this stuff, I'm sure that the president and Mrs. Trump, et cetera, haven't been the first people that have endorsed them. And I like that it's not just coin. It's commodities and stuff too, because that's a problem in government. The problem is when you had the power, that's my problem. Like all of a sudden they're, oh my God, I'm offended. And, but I do think it's a good thing. I think that I was really kind of frustrated as someone that kind of gets Bitcoin and is really starting to appreciate it, that, like you said earlier, the president gives a speech. He was kind of lackluster. People got excited, and all of a sudden he's got his own coin. And it's like, it's a manipulation, and that's my problem. I think that politicians have to they have to. That's my problem with like anybody with wealth being too involved in the government, because there's too much they get out of it, and that's kind of the problem with why theoretically if you own a company and you're an elected official at a high level like president, you're supposed to be able to separate yourself from it. Those rules are in place for that, and this just to me chimes in with those rules. Ultimately, the problem is they're not going to get enough votes. It's not going to go anywhere, because I don't think the Republicans will get on board with it. So it's just going to die on the House floor, and it's just them saying, "Oh, look at us, we tried to do something." That's my problem. Where were they 5 months ago, 6 months ago with that? They could have tried to pass that stuff 6 months ago.
Agreed.
And that's my problem with all this stuff. Like any of these policies that either president does, they complain about the policy that the president did, and as soon as they become president, rarely do they undo those policies. They just kind of leave them. And there are some things that Trump has done, and at least he's said to what he was going to undo some things, and he's undoing some of those things he said he would, and he's doing some of, not all of them, but there are some things he's definitely undone that he said he was going to undo. And whether I agree with those or not, he did say he was going to do them. And that's my problem with these guys. Like, Biden did the same thing, but then he didn't undo too many of the things that he said he was going to undo. But this is a cool one. Like, I think this is right. I think this is something that politicians really need to stay out of pushing the market. And this involves our good friend, Elizabeth. We don't like when she gets involved either. And I don't like the fact that she comes out against these things. Like, it's almost like the other side of what this is. If someone can endorse one of these things, then someone shouldn't be talking about them at all. Unless you're doing something like specifically, like you're passing a law, like where Elizabeth Warren would just come out and say things about it for the last 10 years, and she had the bully pulpit, so she was able to get away with saying these things. And it's like she's had an effect on the markets. Politicians have to stay, obviously, politicians have some effect on the markets, but this is an example of if you're against these coins, you shouldn't be out there, actively pursuing against them. Like, let the market decide.
Yeah, agreed.
Thesis.
I agree. It's just funny because the Democrats got Pelosi on their side, who's like the god trader that has made an insane amount of money, and it's not just Democrats. There's Republicans that are on the list too. You can actually see it. It's all public information. You can see all these congressmen and
how much money they make,
how much they've made, and the trades that they've
there's
made.
There's a lot of things that the Trade Commission, what's it, the FTC, Federal Trade Commission?
Yeah.
There's a lot of things that they should have looked at how some of these folks have made money, both sides of the aisle, because they essentially had information. Whether it was they knew something was going to happen or they passed a law, and before the law got passed, they did something to protect their own interests. Like or their husbands or something like that. Like that stuff that happens. And that's the stuff that why Congress has an approval rating of about 12%, because they, they do this stuff, and that's my problem with this stuff. They make way too much money, more than they should. Oh, who's that?
Is that shared on the screen right now?
It's on the screen. That's how most people right now feel about the stock market.
It's crypto's way more volatile than the stock market, but I saw this. It's pretty funny. Investing in crypto isn't
I see
stressful.
that often about people that are Bills fans.
Josh, 25. I think is that Prince William or who is that?
That is. I think that's Prince William.
Yeah, damn, he looks bad.
What a great guy.
He looks shot. Holy cow. He looks bad.
Look a day over 200.
Yeah. Yeah, we're right now we're kind of steady at the 84.5 level. I don't know what the next move is going to be. Like if I had to guess, we'll probably chop sideways for a little bit, gain some momentum before making a move up. I think that 70. I don't know. I could be wrong because I saw people calling.
You kind of expected this.
I did.
You said a couple months ago that you expected it would drop down under 100.
I texted Troy 2 weeks ago and told him when it was like 94 a coin, don't be surprised if we hit between 77 and 80. He's like, why would you say that? And I'm just like, I'm just seeing a lot of the tea leaves of like trading and there was a future CME gap that had to be filled that was down there, like the support down there, and I'm like, there's always a drop. Like we're not going to hang around 100 and not have another drop. I just felt it was going to be
in my own
inevitable.
case, like related to the stock market, which is kind of paralleling the coins right now. It's down, and I'm like, my wife, and I'm retired, and so I'm not putting, as I've learned from you, the term new money. I'm not putting any new money into my investments. I just have the money that's sitting in those accounts, and I'm like, everybody's freaking out. I'm like, okay, I'm 58, but I'm not touching that money yet. I don't have to touch that money yet. So you know what? It's going to come back. It always comes back. We've had a great year, 2 years. So if I lose a little bit for a few months, great, whatever. It's going to come back. Like, I'm not touching it. If I needed to pull $100,000 out of my investment right now because of something, sure, I'd be a little miffed. But like, it's just the nature of, if you're going to do stuff in the stock market, this is what's going to happen to you. You can't go in like, my mother's 85 and she's all worried about her mom. You're 85. Like, way we've structured her money at this point in her life is to make sure it's not as so related to the stock market, that she can't lose 40%, the way we've protected her investments and stuff like that. I'm like, you just got to understand that that's going to be the nature of. It's just the nature of if you're going to be doing anything with any type of investments, I don't care what it is, like, it's going to be up and down at different times. Baseball cards, it's going to be the same thing.
I want to talk about something. It's. I wish Troy was here because I was having a conversation with his father on social media, and he was talking about diversification, kind of what you were just talking about now, and he was talking about diversify, and I told him that when you're diversifying, I can't find the stat now. When you're the philosophy of diversification is typically a successful strategy for people that have already made a lot of wealth, right? You want to diversify to protect.
Right.
Diversifying on the way up is never a good strategy because it stunts your ability to grow. If you spread your assets over many different places, you're not going to get the big gains that you're going to want to get yourself in the position to get the money that you want to get. And I gave him the example. It's an extreme example, but like all the richest people, like they got rich because they went all in on one thing, one idea, right? They either had a great, like Bezos with Amazon out of his garage, right? Or Bill Gates with Microsoft. Like they all went all in on one thing and just made insane amount of money. They weren't diversified. Their idea was this one idea, and they put all their time and energy in it, and it hit, right? So it's kind of the same philosophy when you're investing. Like you want to find what you truly believe in, and it's not because like you can't do investing based on like a hunch or like, I like the color blue and that slogan or that whatever has blue in it, and that's why you can't do that. You have to put the time and the hours in. You have to do your, like they say, your 10,000 hours of research, whatever number you want to attach to the necessary time that needs to be spent. But whatever investments that you're going to invest your capital into, find the ones that you know, understand, and truly believe in, and flood as much capital as you possibly can into those investments. If that's 2 or 3 different things, that's where your money should go. Because if you do the research and you have a thesis and things play out the way that you see them playing out, you're going to make much more money than if you just diversify into 40 or 50 different things and like take the the stairs up. And then, you have these market drops, and then it takes more time. And it's like people are afraid.
Push back on that.
People are afraid. Yeah, let me finish my thought, and then I'll let you chime in. People are afraid of volatility, and they've never seen volatility like Bitcoin's volatility before. But you need volatility if you're going to get insane parabolic moves in the assets that you have. There was insane volatility in Amazon. There was insane volatility in Microsoft. There was insane volatility in NVIDIA. There's been insane volatility in Microsoft's our MicroStrategy's stock now. You have to have volatility in these assets that are going to perform. And if you pile a lot of money when you get the volatility and you get the 35% drop, because if you're in something like, let's say you have a blue chip stock now, like these stocks that have made it, that are making their 2 or 3%, 4% moves, 5% moves, like your buying opportunities when you want to add to it, you're adding when the stock drops 3 or 4%. Whereas when you're in early on something and the stock or the coin or whatever drops 35%, it's an insane buying opportunity to reallocate a significant position. So when it goes back up, you're going to make 10 times more money than you are if it drops 3% and you're making that buy. Does that make sense?
Yeah.
All right, go ahead. What's your pushback?
So my only pushback on that is where I agree with you is on the fact if you're spending the 10,000 hours, if you're a guy that's not doing the time, then and you're just trusting Voya or American funds or whatever it is that you have to do your investing, that's when they recommend you should diversify, because then you're not actively in control of your account.
That's why 401ks don't work anymore.
Right. And I mean,
that's why
mine's
they don't work
worked
anymore.
very well for me, but I started mine in 1993, so mine grew very well, and I've always mine was my plan when I was working, and I've changed the way it's investing now. I was super aggressive on half of the money, and then I was kind of like it's kind of like when I play roulette. Like I'm a little aggressive on half of the table, but I'm always like, well, but I'll also, bet this column and I'll bet this to see if I can kind of make back my, so I always am little, because I'm not super aggressive, and I knew I wasn't, and I wasn't comfortable with being super aggressive. That's me. And I think there's a lot of people that, if you can't handle the stress of this shit, then you probably should maybe be, all right, I'm going to have other things going on. My house will be one of my assets, or maybe I'm going to have to work longer than I expected to and make sure if I'm getting a pension or whatever, I'm going to need those funds, because if I don't believe I can, base it all on investment. I think a lot of people can't handle the stress of it.
You were in a better position than most, though, because you had other avenues where you were going to draw. You had a pension that
I have a pension.
So I didn't
need to create an investment portfolio, because I knew I was going. I mean, I'm very happy with my investment portfolio. I did much better than I thought I would, to be honest. At least right now, but I knew that I had a pension coming. So there is a little bit of comfort for that. Yes.
Most of America, though, that the 401k or their IRA, whatever, that's all they got. So right. the initial like safety thought, well, again, and because people are working so hard, they don't have the time to allocate to do the research. Right. So they'll give it to a advisor or some fund manager who's going to play it safe, who's going to get them their whatever percent, and then take their assets under management and diversify them, and for 30 years, and then they're going to retire someday and realize that it's not as much as they needed because it's not keeping pace with inflation. Right. Or they weren't saving anywhere near what they should have been saving because their asset manager
just can't at this point.
Well, their asset manager was just happy with the amount that's already in there, right. And they didn't want the hassle of losing the account if they say, hey, you're only putting in 8%, you should be putting 15 in, and they just let it go.
Yeah, they're not asking those questions. They're not, and I remember those questions, like when I asked them, because I asked those questions, and I was like, well, what percentage would you guys recommend? Well, this is back in the 90s. Well, somewhere between 0 and 50. Like, it's like, well, that's not an answer, and we chose to go, both my wife and I have chosen to put more in than I think most people do, even in our situation where we do definitely both have pensions coming. But there's definitely, and even now my wife's is still aggressive. And she's all nervous this week, and I'm like, relax, like, don't look at it. It doesn't matter. Like, we'll worry about it. Because you can't do anything about it anyway.
This conversation is why people are so into crypto,
exactly.
Not Bitcoin. I'm not talking about Bitcoin.
Right. No, I agree.
I'm talking about crypto, right? That's why even Troy, if Troy was here, he would tell you, like, the trading, the leverage trading, the like, there's no patience. And I have to, and I'm sure Troy would share it. I'm often like sending him messages to just be patient, man. Like, you don't have to put your portfolio at risk trying to trade your way to $1 million like next month. Like, right. Just, even if you're going to hold these crypto tokens or shit coins, just hold. Don't because every cycle, the same thing is, until we're proven otherwise, there's these fluctuations, and you still have a move later on where the money's gonna come back. Like when Bitcoin drops 5%, altcoins drop 25%, and that sucks. It sucks being in crypto in that time. Again, I get it, but like when it drops 25%, don't throw on a 50x leverage on something because you want to make back the 25% you just dropped. Right. And instead of losing 25%, you just lost everything you have because you were trying to get back that 25 quick. And some of that ideology is because that generation is seeing their parents, who are in the demographic of like my generation now, where like we're sandwiched between the people just above you, the boomers who had pensions and were able to save, only lived 6 or 7 years, typically on average, had Social Security help cover the gaps and were able to make it in retirement, to, my generation now, who's lived through 9/11, the Great Financial Crisis, and COVID, three huge events that rocked
in 20 years.
Yeah, they absolutely rocked markets. Yep. That if you started, like, I graduated high school in '96, graduated college in 2000. We have charts in my general office and my broker dealer that show from if you started investing in 2001 until 2024, what your portfolio looks like, and if you flip it on its head, it's 7.96% average. That's number one. Let me be very clear. It's a 7.96% average from 2000 to 2022 investing in the stock market. If you flip from 22 and start as 22 being year one, flipping it upside down and put in, it starts with 100 grand. So you put 100 grand in 2000, you get 7.96%, and you have something like, after you start drawing funds out, I'm just throwing numbers out there. I don't know if it's completely, I'd have to bring it in next week and maybe show you. But like, let's say you have like 180,000 left after you start taking withdrawals or whatever the case may be. When you flip it upside down and you start in 2022 and go all the way to 2000, you actually have like 1.3 times more money because you flipped it on its head, but it's still 7.96% that you're averaging. So when you start saving money, has an enormous impact on what your portfolio construction will look like. And all we talk about in my industry is I can get you X amount of percent.
Right.
It's completely not relevant when you look at like the guy that could get you 10% in 2000 is much better than the guy, is much worse than the guy that gets you 10% in 2009. If you start investing in 2009, same 10%, you're going to have, and you start saving in 2000, the guy in 2009 is going to have more money because he doesn't get 01, he doesn't get 08.
Right.
You lost almost 30% the first 3 years of the 2000s, and then you lost 40 in 2008.
In 2000, I didn't have a lot in, obviously, because I started in 92, and I wasn't as aggressive in my nights because I literally didn't have the money. I mean, I was living check to check at that point in my life. New teachers didn't make shit back then. So, I literally didn't have the money, so I started, maybe like 97, 98. So I didn't even have a lot in after 9/11. So I didn't get killed that much, but 08, I lost significant. And I know that, and that was awful. And, I remember waking up, but again, it was 2008. I'm like, all right, I'm not retiring for 16 years or whatever the math would be. So I kind of just, well, it is what it is. Like, there's nothing I can do about it anyway. Like, it's funny, but it is a funny thing when you were talking about saying stuff. And did you post this, or is this just something that floats around on Facebook? And it's the thing where the guy has the car, and he has the car, and it was $7,000. He bought it for $7,000, and he sells it for $9,000. But then he buys it back for $8,000, or then he sells it.
No, I've seen that.
You ever seen that one?
I didn't post it, but I've seen it.
And it's like, I love the discussions on there because it just shows that, like,
people have no idea how money.
But what's great about that post is that only a few percentage of the people that post anything like, why did the guy sell it the first time? He should have just held on to it until it had more value, which I think is what the post is supposed to be trying to get people to realize. And I realized it right away. I'm wondering if I would have realized it before I started working with you on a podcast, but it was just like, oh, maybe I should just hold on to it and just write it out. Like, and the car is the Bitcoin. Cars don't sell it and then try to buy it back. Like, just hold on to it. Just hold on to it. Don't buy toast with it.
I've seen leverage, or I've seen trading graphs the same way, where a successful trader will be like, he bought a stock for 10 cents, sold it for 11 cents, and then buys the stock back later on at 20 cents and sells it for 22 cents. And then buys the stock back later at 40 cents and sells it for 45 cents. And he's like, look, I made 10%, and all these like numbers and percentages. Like, bro, if you would have bought the stock at 10 cents and held it to 50, you'd have so much more money if you just would have held it all the way through.
Well, even the way people do the math in terms of like how much he made, even in that stupid scenario, like they're not counting into the fact, like, like even where the $7,000, what the original amount came from, which is kind of funny. But if you have that money to start with, again, like my philosophy has always been with these investments that for me personally is that, I'm going to do some, if I was a day trader, sure, I'm going to do some things, but it's like, you got to stick to your guns. And if you're all in on something, you got to be all in on it. That's at least based on what I've learned listening to you. Like,
I do remember, I don't want to save a photographic memory because I don't, but it just flashed in my head. I seen it. 100,000 in 2000 was 76,000 in 2009.
Yes, that's about right.
So if you have 9 years of investing. Yeah. So if you come into the game with $100,000 in 2009, right, you start 9 years later and you're already 24,000 ahead of the guy that started in 2000. Right. without even putting any money at risk yet. So it's a lot of like,
The only thing I'll say is that, and I look at it from this standpoint, like, you go, I guess at some point you have to start, and it takes a while to build up to get to that amount. So, unless you were just putting in a savings account, if you were able to read the tea leaves and you had just put it in a traditional 2% savings account or whatever it was earning back in, 2000, and just left it there. But how do you know? Like, who's going to know
what
that,
you do know, but it's hard for people to change their mindset about what you do know is that there's always going to be big drops in every market. And if you condition yourself to get past the emotion of, oh my God, I'm losing so much money, to, oh my God, what I love just went on sale.
Right.
And you see green instead of red. That's what I see. Like when I saw 79 last night, I added like not much, but I added a little bit because I'm like, I just got $106,000 bit. In my mind, it's like I got $1 million. Every time I buy, I'm like, I just got $1 million Bitcoin for whatever the hell the cost is. And people will laugh at me and say you're an idiot or you're crazy. When I was adding Bitcoin at $500 and I was getting Bitcoin at $1,000, I was saying I'm getting $100,000. I'm getting Bitcoin at $1,000. I'm getting $100,000 Bitcoin at $1,000.
Right.
That's what I told myself way back then. That's how I kept myself motivated.
Well,
so now
funny.
I have to change that.
Something real funny. Like
Yeah.
I remember when I had my first mortgage on my first house that I bought, and the interest rates were really high. And then when the interest rate, and I had a variable mortgage, and I was getting ready. I wanted to lock it in at some point, so I wasn't. And my mortgage people were pretty cool to say, because I didn't know anything. I was 20 whatever. And they're like, don't lock in until you. So you're kind of, when you started interest rates to go down, you saw them going down, you're going down, going down. And you're like, okay, when should I lock in? It was like, it's almost like, when should I buy more Bitcoin as it's dropping, as it's dropping, as it's dropping? Like, okay, if it's say it hits 75 tomorrow or something, you're like, should I buy more? Or should I try to wait another couple of days and see if it goes down to 70? Because I do believe it's going to go back up. The same thing was when I had to lock in my mortgage, and I think I did it. That was the one time I really got invested in, like, how much more do you think the interest rates are going to go down? But even it was funny because even at that point, then interest rates dropped so much more. But by then I had bought I had a new house and a new mortgage anyway. But it was that funny at that point when I was trying to lock it in to like figure out, and that's almost, I guess it's a similar situation here. It's like you're trying to decide, if I'm going to buy some stuff, how long do I wait before I buy? I mean, or do you just buy a little bit here and see it? Maybe I'll get a little bit lucky, a better price tomorrow. So maybe I'll buy a little bit today, I'll buy a little bit tomorrow, and I won't try it all at one time, right? Maybe I'll buy, instead of like if I had $100 or $1,000, like, well, I won't spend the whole $1,000. I'll spend $200 today and maybe tomorrow. All right, it went down a little bit more, and just maybe I'll get lucky, or I'll have to get some of it back on the way up.
I'm going to end the podcast on this last tweet, and this is the PieCoin tweet. This individual is one of the people in the community that believes that PieCoin is going to be worth $314,000 a token. So this isn't a PieCoin basher. This is a guy that believes in the token, believes in the project, and believes in those high price points. He tweeted this. These are his words, not mine. I'm just reading what he tweeted, so we can have context there. I don't mean to cause confusion or division among pioneers, especially the GCV community, but I must convey these facts. I will convey some important points. Please read carefully. Point 1. Accounts that have transferred Pi to the exchanges are likely to be frozen or confiscated for violating the terms. This is because Dr. Nicholas has stated that he will uphold the dedication and contribution of true pioneers. Bullet point 2. I believe that even Pi purchased from the exchanges that has been transferred to a personal wallet and locked on chain, Pi can still be confiscated. This is because the Pi blockchain is designed to comply with global regulations. Point 3. I'm making this suggestion because I care about the welfare of the GCV community who have devoted themselves to GCV for many years. However, it's unfortunate that many pioneers have forgotten the announcement made by CT Core team earlier. Core team has stated they cannot prevent the listing, but they are not involved in it. In addition, it seems that many pioneers have misjudged the fact that the explicit provisions in the migration terms, mainnet checklist number 6, take precedence over Core team's decision because it has gone through the digital signature process. Unless Core team changes the current mainnet migration terms, the probability of them approving the exchange listing are 0%. Mainnet checklist terms number 6.a. Use of this is from their terms of service. Use of tokens. Receipt is acquiring the tokens for the exclusive purpose of using the tokens for Receipt's own account, not as a nominee or agent, and not with a view to resale, speculation, or investment. And recipient has no present intention of selling, granting any participation in, or otherwise distributing the same, and is not otherwise acting as an underwriter, dealer, or other person participating in a distribution of tokens. I can't say that word. Recipient has no expectations of profits from acquiring the tokens. They understand that any liquidity for the token or ability to resell the token may be limited, and that it should not be acquiring the tokens with any expectation of reselling at a profit. Should understand that the tokens are designed solely for its intended use on the Pi network. The tokens do not represent a right to any income stream, distribution, profit share, or any other form of pecuniary reward or interest. So this is the PiCoin terms of service. This is why, again, I'm not going to talk about PiCoin anymore, but I wanted to end on this and talk about it one last time. Understand what you own. Know what your token is. The PiCore team is telling you that you can only do X, Y, and Z with the token. So you don't really own the token. The PiCore team can confiscate it if you violate whatever they decide to be a violation of terms of service. That's even more draconian and worse than some of these other altcoins that have active founders and foundations, and this is pretty crazy. So before you get too excited about like calling this the next Bitcoin or being better than Bitcoin, like know what you own and know what can happen. Like this is not crypto, this is not Bitcoin, this is not the thesis of why this ecosystem even exists. Like perfect place to end this podcast the way that we always end every podcast, because no matter what asset that you decide to own, no matter what you decide to engage in your life, no matter what people you surround yourself with, the only way to operate in this current 2025 climate of society is the way Satoshi left us, which is don't trust, verify. See you guys next week. Thanks for watching. Hit the like and subscribe. Peace.